In this video, I'm going to be showing you the easiest Forex scalping strategy that actually works. This is perfect for you if you're a beginner, you're looking for a scalping strategy to get in and out of the market really quickly, and you're looking for something that actually works. In this video, I'm going to break everything down for you step by step so you understand it thoroughly, and then actually we're going to take some trades together so you can see exactly how this works. Hey, this is Adam Winnig, and if you'd like to make your trading more easy, more lucrative, and more fun, then consider clicking the subscribe button and turning on post notifications right now. Okay, let's get into it. In this video, we're going to be talking about the easiest Forex scalping strategy, and I'm going to break it down to you and show you exactly how everything works. Now, this is how this video is going to be broken down. Number one is I'm going to show you the entries so you know exactly when to enter a trade. Number two, I'm going to show you where to put your take profit and your stop loss lines. Number three, I'm going to be walking you through the money management system of this trading system. And then the last part is the best part because I'm actually going to go through and actually demo this with you. And we're going to take several trades together so that way you actually learn it and that way you train your eye for it. And that way you can take this away, watch this one video, and you'll be able to implement it immediately. Oh yeah, and at the end of the video also, I'm going to show you proof that this actually works. I'm going to show you all of our results and data. So make sure you stay tuned for that. Okay, so step number one is all about the entry. So what is required in order to enter? Now we're going to be trading something called divergence. If you're not familiar with it, it's one of the most powerful indicators that's out there because unlike most indicators that are lagging, this is a leading indicator that gives you a probability of what's likely to happen with price in the future. Now, one of the reasons that this is so powerful is because not a lot of people use this because they don't understand it. So I'm going to explain how divergence works really simply, but don't worry if you don't understand it. I'm going to show you a simple indicator that you can pop on your charts and it'll just give you alerts when you see divergence actually happening. So the reason why it's a little bit confusing is because there's something called regular divergence and there's something called hidden divergence. All divergence is a differentiation between what's happening on the chart and what's actually happening on the oscillator. Okay, so an oscillator is something like an RSI, it's something like a stochastic if you're not familiar. And basically, if we see that price in this case is making like a higher high, you can see it's clearly making a higher high, but you can see it's actually making a lower high on the oscillator, then this is something called regular divergence. And likely what's going to happen is the market is going to start going downwards. Now, here's an example of regular divergence. In a bullish scenario, you can see that price is making lower lows, but on the oscillator, price is actually making a higher low. So because of this discrepancy among the price chart and the oscillator, this is what's known as regular divergence as bullish. The other type of divergence is called hidden divergence, and this is an example of bullish hidden divergence. You can see that on the price chart, it's making a higher low, but on the RSI or on the stochastic indicator, the oscillator in this scenario, it's making a lower low. So this is hidden divergence and price is likely to increase, which we see here. And the last type of divergence that I'll show you is another form of hidden divergence, which is this is a bearish example. You can see price is making a lower high and on the oscillator, it's actually making a higher high. Now, don't worry. If this was confusing to you, you can go back, you can screenshot these if you want to, or I'm going to show you a simple indicator that you can pop onto your chart. It'll just automatically notify you if it's regular or hidden and what to do. Basically, it'll just tell you if you should take a buy or you should take a sell. Now, one other thing that I should mention is that we're only going to be trading with the trend. Okay, the trend is your friend. You've probably heard that. So what we're going to do is we're going to put on this 10 EMA or exponential moving average, and we're going to put on this 100 exponential moving average onto our chart. Okay, and we're only going to trade in the direction of the trend. So we can clearly see that this is in a downtrend. So we're only going to be looking for sell trades. And on top of that, we're going to be trading the hour chart. Okay, so for entry, again, we're only trading in the direction of the trend on the hourly chart and we're waiting for divergence to happen, okay? So the second thing is where do we actually put our take profit and our stop loss? And then we're going to put this all together and actually demo it and show you how this actually works. So where do you put your take profit and stop loss? We're going to be using something called the ATR. Okay, the ATR is another name for the average true range or the average trading range. It's basically the average volatility in the market over, in this case, we're using the 14 period, which means over the past 14 candles, what's been the average range of those candles. And we're going to use that to set our stop loss and our take profit. For our stop loss, we're going to set it as 1.5 times the ATR. And for our take profit, we're going to set it as 3 times the ATR. So in this scenario, let's take a look at it. So for example, if we were to just click right here, we can see that the ATR is 110 points, okay? So in this scenario, we're gonna set our stop loss at 110 times 1.5 as our stop loss, and our take profit is gonna be 110 times 3, which is 330 as our take profit. So in this scenario, we're always gonna be using at least a 1 to 2 risk to reward ratio, okay? So we're gonna risk 1 in order to make 2. Okay, so we've talked about the entry. Remember, we're trading only with the trend on the hourly chart and we're waiting for a divergence to happen. We've talked about where to put the stop loss and where to take the take profit. Remember, we're doing it at 1.5 times the ATR for the stop loss and 3 times the ATR for the take profit. Now let's talk about the money management system. Now in this scenario, I'm only going to be risking 1% of the account per trade. Now you can risk as much as you'd want to. You can risk 2% or 3% if you really like to, depending on your risk tolerance. But again, we're going to be risking 1% in order to make 2%, okay? So in this scenario, we can define R as 1% of our account, okay? Now we're gonna be doing something a little bit different, okay? And I'll include a video link and a card up here so you can see more about that. But basically what we're gonna be doing is using something called asymmetric compounding. And this is extremely powerful. So let me explain it to you really quickly. I'm not gonna take a lot of time, but just explain it to you. Basically what we're trying to do is our goal is to win 2 trades in a row. And when we win 2 trades in a row, you're gonna see that this is really, really powerful. So for example, if we were to have a losing trade, okay, we would lose 1%, right? If we were to have a winning trade, okay, since we're winning 2%, we would win 2%, and now we would be up a total of 1%, right? Now, the key with asymmetric compounding is we're looking for 2 winning trades in a row. When we get a winning trade, we're going to use our earnings, which was 2% in this case, and our previous R, which is just 1 is R, right? So on our next trade, we're actually going to risk the 2% that we won plus R. So that's a total of 3%. And if we win this trade, then we're actually going to earn a total of 6% because we're risking 3% of our account in order to make 2 times that, which is 6%. So in this case, we'd earn 6% and we'd be up 7%. Right? Okay, now let's take another example. Let's say that we have a loss here. Again, after the 2 winnings, by the way, just to understand this, after we win 2 in a row, we're going to drop back to our original R, which is just 1%. Okay, so we're going to go back to risking just 1%. Let's say that we lose, we're down 1%. We risk, we do a win again, so that means we'd win 2%. Right? And then what are we doing? When we win one, we're going to take the 2% earnings plus the original R and we're going to risk 3%. But if I lose this, then you get the idea, right? I'm losing 3%. Okay. Now this is going to make a lot more sense when we actually do it in the demonstration in just a second. But this is a concept called asymmetric compounding. Okay, so now that you know the rules, we're only trading in the direction of the trend on the hourly time frame. We're waiting for divergence to happen. We're setting our stop loss at 1.5 times the ATR. We're setting our take profit at 3 times the ATR. And you understand we're risking 1% of our account. And we're using this little strategy called asymmetric compounding. Now let's go ahead and let's take some trades together so that way you understand this. You can start training your brain to actually seeing this and you take it away and you can go and actually start implementing this. Oh yeah, in just a second, I'm also, after I show you a couple trades together, then I'm going to show you the results of all this so you can see how truly powerful this actually is and how simple this is. Okay, so as you can see here, we're trading USD JPY on the hourly chart. I've pulled this up in a simulator, okay? You can see the exponential moving averages, so we know that this is in a downtrend, right? You see the 100 EMA and you see the 10 EMA, which is underneath it. Down below here, you'll see I have the average true range of 14 periods, so we can calculate what our take profit and stop loss is going to be. And I also have this indicator that's going to show us divergence. Now, I'm using something specific called the bank secret indicator. Now, the reason I love this is because it doesn't require you to spend time on the charts. It's going to scan the charts and look for scenarios that meet this criteria on this time frame, on this trend direction, and it's also going to wait for the divergence. And when the divergence actually happens, it's going to send you a push notification straight to your phone, or it'll send you an email, or it'll just pop up on your MetaTrader 4 box if you have that open. Okay, so let's go ahead and dive into this right now. So I'm just going to start playing the bars. And when I get an arrow, that means that there's divergence and this meets the criteria. So here's a perfect example. Okay, we saw that I got this alert right here. It's in a downtrend. We see that the divergence has actually happened. Okay, right here. So what are we going to do? We're going to go right here to the chart and we're going to enter on the very next candle. What I'm going to do is I'm going to look at what is the ATR at this time. I can see that the ATR is about 112 or so. So I'm going to grab out my calculator. And I'm going to do the math really quick. So let's say 112 times 1.5. And I can see that I want to put my stop loss at 168, which means I would want to put my take profit at 2 times this, right? 168 times 2 would be my take profit, right? So that's 336. So if I just go ahead and I enter on this next candle, I can see that I want to put my stop loss at 168. So it would be like right here. And then I want to put my take profit at like 320 something like that, right? Okay, so I have a 1 to 2 risk to reward ratio. So that's how I do it. I would take the sell, okay, I would click sell, and then I'd set my stop loss and my take profit, and then I keep advancing the bars, and let's see how this actually plays out, okay? Okay, what happens? Okay, and it looks like I may have actually got stopped out here. We can go ahead and take a look just to give you an idea that this strategy is not going to win every time, but it is going to give you an edge. Yeah, it looks like if you look here, it would have stopped me out of my position there, okay? So that's a loss. So we'll chalk that up as we risked 1%, so we're down 1%. So let's continue here. Okay, so I got another alert here. It looks like it's in an uptrend on the hourly chart. We got a sign of divergence, so it's telling me to buy right now. So what am I gonna do is I'm gonna come down here and I'm gonna look at what is the ATR trading at right now. And I can see it's trading at about 79 points. Okay, so let's call it 80 points. And I know that my stop loss is gonna be 1.5 times. So let's grab the calculator. Okay, so 80 times 1.5. Okay, 120. So I'm gonna put my stop loss at 120 and I'm gonna do my take profit at 2 times that, at 240. Okay, so let's just take a look, okay? So we would enter the trade right here and I'd put my stop loss down here and I'd put my take profit up at, what was it, 240 or so? So up here, okay? So let's advance the bars and see how this plays out. Okay, I got another signal there, so we'll see how that one would have played out. Okay, boom. So it looks like I would have definitely hit the take profit here. If you take a look at this, okay, we put our stop loss at, what was it, 120. Okay, didn't hit the stop loss, and boom, it clearly went through and it smashed the take profit, right? So that was, we risked 1% in order to make 2%. So now we're up a net total of 1%. What else happened? I got another alert right here. So I would have done the same exact thing. You know, on this, we're taking, since we're trying to win 2 in a row, we're going to take the 2 that we just won, 2% that we just won, plus the other 1%, a total of 3% that we're going to risk on this next trade. And you can see how this actually plays out. You kind of got an idea. But I'll do it for you anyway. So again, it was about 80. So we know that it's basically the exact same. So our stop loss would be down here at 120, which is 1.5 times the ATR. And we know that this would have hit our take profit very easily as well. So that's amazing, right? So we risked the 2% plus the 1%, the 2% we just earned on the last trade, plus the previous 1%. So we risked 3% in order to make 6%. And we actually earned the 6%. And now we're up a total of 7%. So let's continue. Okay, great. So it's in an uptrend, as you can see with the EMAs here, and we got another alert of the divergence actually happening. So let's go ahead and let's take a look at this. Okay, so we're going to take a look at what is the ATR. The ATR is 100, so we can basically say that 150, right, 1.5 times the ATR is going to be like right here, kind of towards the bottom of that zone. Another cool thing about the bank secret indicator is it prints these zones. We only want to be trading on a zone. I forgot to mention that. These are supply and demand zones. It prints these zones. It's really easy to see versus drawing subjective supply and demand zones, okay? Besides the point, okay, 1.5 times. And by the way, this bank secret indicator, it's really cool. I know I'll leave a link in the description below. So you guys can try it out for 7 days and only pay for it if you feel like it's totally worth it. But you can try this out, test it a whole bunch, and you'll see that this is really powerful. So again, I'm going to put my stop loss here at 150 and I'm going to take my take profit up at the top there at 300 because that would be 2 times what it was. And it looks like I probably got stopped out here. So we're just going to measure this out really quickly. And yeah, it looks like I got stopped out there. So that's a loss. Okay. So that's down 1%. So we're up a net total of 6%, I believe it is, if I'm doing the mental math correct. So let's keep trading maybe 2 more. Okay. So here's the idea. Okay. Again, we got another alert coming in here. Let's go ahead and measure this up. It's in an uptrend. We're looking for buys only. We're going to go down to the ATR and we're going to measure this. Okay. So the ATR is about 115. Let's pull up on the calculator. Okay. So 115 times 1.5 equals 172. So we're going to put our stop loss at 172 and we're going to take our take profit at 345. So let's go ahead and do this. 172 and 345. So our stop loss is going to be like down here, and our take profit is going to be like up here above past that zone. Okay, so let's see how this plays out. We got another alert, so we'll also see how that one plays out. Got another alert, and let's see what happens here. Let's let it, got another alert, so let's just keep seeing this play out here. And it looks like, boom, that would have hit our take profit there, okay? And actually, all these would have been winners in a row, but we'll just go back to the original one. I believe it was this one that we were trading. So again, just to give you the idea here, I think it was this one. I'm pretty sure it was this one, yeah. So boom, we would have been good to go on. I'm getting a little bit confused here because I can't remember, but you see that these all clearly would have hit the take profit. This one, which would risk 1% again in order to make 2%. So that would put us up 8%. And then we do the same thing with this one, right? We'd take this trade, you know, boom. And oh, I think it was this one actually. Hold on. I think it was this one originally. And then these two came after it. So it wouldn't hit stop loss, come up here, beautiful, and hit the take profit. Okay, so what would that do? We would risk 1% in order to make 2%, which we did. So I believe that puts us up a total of 8% if we're doing the mental math right. And then on the next trade, what are we doing? The next trade, we're taking that 2% that we just gained plus the 1%. That's a total of 3% in order to make 6%. And we did. We did win that next trade, and we ended up making the 6%. So I don't know if I'm doing the math right, but I think it's like 14%. I'll have some text up on the screen so I can make sure that we're doing the math correctly here. Oops, I just realized that I didn't let these trades play out all the way. So let me just go ahead and show you that really quickly to show you that all this string, we would have had a whole bunch of winners in a row. As you can see, the market just continues to climb up and definitely would have hit the take profit on all of these trades. So just wanted to clarify that and make sure that you guys saw that. So that's the strategy. It's really simple. And again, you can test this as much as you want, but let's go ahead and let's actually take a look at the results because we've done a lot of testing on this. Okay, so hopefully by now you understand the strategy. We're only taking trades in the direction of the trend. We're waiting for divergence to happen. We're setting our stop loss at 1.5 times the ATR, and we're putting our take profit at 3 times the ATR. And we're using a concept called asymmetric compounding, where we're basically trying to win true trades in a row. Now let's go ahead and let's actually take a look at some results that we've done. Okay, so here you can see a back test that we did. We tested all these different pairs over a year of those simulations. So if you can imagine, a lot of work, right? But I just want to show you the power of this. Here you can see the wins, or here up at the top, you can see the pairs that we've tested. So in this case, it was USD JPY. You can see we took a total of 92 trades. We got 38 wins and 54 losses over the test period here. You can see that our win rate was about 41%, and we ended up profiting about 52% just on this one single pair. Okay, you can see the same thing with GBP USD. We took a total of 89 trades, 40 were winners, 49 were losses, and we had a 45% win rate, and our profit loss was 65% just on this one pair. Now, not every pair was profitable, as you can see, but we want to trade them as a portfolio, and you can see as a portfolio, we took 781 trades, 331 were wins, 522 were losses. That was a total winning percentage of 38%, which is fantastic, obviously, and this was a total gain of 319%, which is amazing, obviously. So here's a strategy that absolutely works. Now, my guess is that you probably are somebody that's new to trading Forex, and maybe you're looking for a way to grow a smaller account fast. So I put this video card up here right now, so you can go ahead and you can see the best ways that we grow small accounts absolutely faster than anybody else on the planet. So go ahead and take a look at that video. And also I'll include the link in the description for the bank secret indicator. So you can try that out. You can play that out. And once you become a member as well, we'll give you access to our best trading algorithms. And on top of that, we explain this more in depth and have live coaching every single week so you can get really, really good at this and master this. So go ahead and take a look at that video.